breaking down the deals, data, and disruption shaping global markets. You're listening to The Daily Ledger with Dennis Sert.
Ladies and gentlemen, it is Thursday, December 4th, 2025. This is the Daily Ledger, and I am your host, Dennis Sert. Great to be here with you today. Let's dive in. So, the Dow Jones Industrial Average is at 47,877. NASDAQ is, the Dow Jones is down 0.01%. And then the NASDAQ is also down 0.07%. S&P 500 is at 0. Bitcoin is at 91,989. We got a few stories today. Should be fun. Let's dive into the first thing that I wanted to share. So this is the ADP National Employment Report, which came out yesterday. Says that private sector employment shed 32,000 jobs in November, and annual pay was up 4.4%. So this is indicative of sort of a slightly weakening job market due to AI, most likely, based on what we've been seeing. And of course, this is a recurring theme in this show. We've been discussing job loss as a result of AI, particularly Gen Z. So we can kind of see that here. And this is good for Fed rate cut prospects on December 14th and 15th. So in about a week or so here. In fact, I think the odds have gone up quite a bit to like 80% that they're going to cut another 0.25%. Of course, this is something I predicted a few weeks ago when I read last meeting's FOMC notes. And there was a lot of hubbub around, Jerome Powell says it's very divided. It wasn't very divided. Almost everybody voted for the cut. They're probably going to do it again. And now even the New York Times is saying that as well. So that's what we're sort of seeing here. So 32,000 jobs cut in U.S. private employment in November. Let's move on. So Amazon came out with this new chip called Trainium 3. Apparently it's really good. And it apparently cuts the cost of AI training and operating AI models by up to 50%. So it's quite efficient. And this is sort of making the video a little bit nervous. Especially given that AWS has been doing deals with other companies already. So there's that. And the other thing I wanted to say on that is that Amazon seems to be very busy in the AI space these days. I think they're trying to catch up. Apparently they're releasing these AI agents that can work for days at a time. So I think that's where the market or sort of the AI space is moving into right now, sort of longer lasting runtimes for AI. So you're seeing that already with like Claude Code, and you're seeing that with OpenAI's Codex. I think they're officially going to release that probably next week. But I've been using it, and I like it quite a bit. Basically, it does pull requests on its own. I mean, you kind of have to ask it to do it, but it kind of thinks about it for kind of a longer period of time than what you'd normally be accustomed to. So yeah, so that's where the market's going. I think the AI space, and so that's what we're kind of seeing here. So it says here, AWS has sometimes been criticized as a laggard in the AI space since it was slower to release its own models. But it seems like it's catching back up now. So cool. Let's move on to this news story. So Mark Zuckerberg and Meta platforms are reportedly expected to meaningfully cut resources for building the metaverse. Apparently, they've cut it by 30%. So in 2021, of course, we all remember Zuckerberg was really bullish on the metaverse. And, they put quite a bit of cash into it. By 2025, they put $50 billion into the metaverse, building infrastructure. Zuckerberg thought it was going to be the next internet. But the problem was the Meta Quest series, like the VR goggles, the unit, like the sales are flat. They're at about 10 million units annually. Doesn't seem like there's growth there right now. And user engagement sort of below 200,000 daily active users, which of course isn't that big compared to what Meta is used to the tune of, hundreds of millions, if not billion, uh, daily active users, of course. And so they're freeing up with this budget cut in the metaverse, or for the metaverse. They're freeing up about $5 to $6 billion annually. So that's money that they can put into, of course, Meta AI, Llama, training on that. Of course, we remember that few months ago, Meta essentially gate kept all of what the WhatsApp APIs access to, just all the available chatbots out there, right? So basically, only Meta AI is able to access WhatsApp now, rather than ChatGPT, Perplexity, Poke, etc. And so, just on that note, according to this TechCrunch article, the EU is investigating Meta over policy change that bans rival AI chatbots from WhatsApp. And of course, Meta is fighting this. And if they lose, however, it's going to cost 10% of their global annual revenue in fines. So I'm wondering, is that also why they cut the metaverse spend? Because they need cash on hand in case they lose this lawsuit. So I'm not a fan of the EU sort of just fining companies, willy-nilly. They fined Apple like earlier this spring, because, it wasn't the EU, it was actually the UK, over essentially not Apple not giving them the keys to the kingdom, if you will, or the security keys they need to access iMessages and stuff. And so basically security. And so they got fined like several $billions. It was pretty bad. Yeah, so you see the UK, and now you see the EU as well, sort of fining sort of US companies and tech companies in this way. Yeah, I mean, it's not good. But yeah, so we have that story. Just on, before we move on, just on Meta cutting the budget for the metaverse. I mean, this isn't necessarily like a sign of defeat for Meta. I mean, you look at Amazon, like in the past, they essentially cut the Fire Phone completely off. But they did it in exchange to win in sort of like the cloud computing space with AWS, to be dominant with AWS. And that was a really good bet, because they probably weren't going to have the Fire Phone compete with iPhone. And yet, Apple doesn't even have a cloud service, cloud computing service that can compete with AWS or at all. But so there's that. So Amazon made a good decision in sort of axing the Fire Phone in exchange for AWS dominance. And then here, that may also be a good move for Meta, but instead of the Fire Phone, it's the metaverse, and then instead of AWS dominance, it's Meta AI. So there's that. And I also want to continue talking about VR headsets. I don't think VR is the way to go, especially with these huge goggles, right? Like the Meta Quest, like the Apple Vision Pro. Let's read this story here. Apple halts Vision Pro to focus on smart glasses by 2027. I mean, it costs way too much. I think that's why it chiefly failed for Apple. $3,500 per unit. No, I saw some comments on X yesterday and on sort of YouTube comments saying that, like, quote, I would have bought it if it was $2,000, but at 3,500, no way. And you can see that with the sales because they sold less than 500K units globally. Apple did, whereas the AirPods, the original AirPods, when they first came out, sold 20 million in the first 12 months. And in 2024, to compare apples with apples, right, when the Apple Vision Pro came out, in 2024, Apple sold 88 million iPhone 16s and 56.9 million iPads. Again, as opposed to 500,000 Vision Pros. So 88 versus 1/2, right? You can kind of see like it completely flopped. Yeah, and not to rag on Apple, right? And just to sort of tie something in that I wanted to say yesterday but didn't have a chance to. So we were talking about yesterday how Apple Intelligence kind of failed. Um, Here's the thing, right? I can kind of see why they didn't want to jump into AI just at first, because the strategy worked for them with other technologies like Face ID, for instance. I think Samsung had Face ID, like not called that, but facial recognition technology to open your phone, to unlock your phone, like before Apple did. But Apple sort of made it a huge pride point to not do it at first and then come in later and do it. But I just don't think that sort of strategy is viable anymore. Um, I'm sort of a startup mindset. Like you just have to do as much as you can and then some. Like you can't ever stay stagnant. So as much as that strategy worked for Face ID, I don't think it's gonna work for AI, which it hasn't thus far, and I don't think it will again. I think that was not one off, but something that happens very rarely. So okay, let's move on. So Sam Altman has explored deal to build competitor to Elon Musk's SpaceX. In this Wall Street Journal article, it's talking about how Altman wanted to invest in Stoke Space, or he wanted OpenAI to have a deal with Stoke Space, which looks like this. Apparently, they build reusable rockets. And so this was actually back in the summer, but yeah, obviously they've been having to shift funds. Maybe one could make an argument they got a little bit complacent during the summer, and that's what allowed sort of Claude, Gemini to catch up because they started thinking about, oh yeah, space, what, and then they started talking about a Neuralink competitor, right? Sam Altman backs Merge Labs, a new rival to Neuralink. Apparently, they build brain-computer interfaces, but that are wearable and non-invasive. So as opposed to Neuralink, which is sort of installed in your brain via surgery. Yeah, but there's that. So there's the Neuralink competitor. There's the SpaceX competitor. I'm starting to sense a theme here. Yeah, but I guess they wanted. I think the big players in AI are looking to build data centers in space. I think that's a thing now. And space tech is kind of heating up, especially because I guess like the pound per thrust, or it's like the cost per dollar, or no. It's the cost per pound that you can send out into space now is kind of low. So meaning you can send stuff up there for cheaper now due to like reusable rockets and stuff like SpaceX, like companies like SpaceX. And so anyways, so that's why they're trying to build, that's why sort of the market's going in that direction. Like more and more startups are sort of doing something in space tech. But yeah, and then these AI companies, obviously bring the demand with wanting to build data centers up there. Yeah, orbital data centers would allow companies to harness the power of the sun to operate them, advocates say. Yeah. Yeah. I wanted to play this clip. It's Let me see if I can do it real quick. It's basically South Park that was kind of ragging on the whole like, oh, we're gonna do space stuff, we're gonna do like brain computer imaging stuff. I think I can pull it up here. It's like 30 seconds.
How can I help you?
Yeah, hi, it's Randy Marsh. I was wondering if you might have any internships available for my daughter.
Hey, what tarnation? I told you I'd beat you, you son bitch! You ain't beating me, turn up them thrusters!
Yeah, so the idea is like, because of the prevalence of AI and tech, the only people that are available to do work and jobs are like these handymen. And so they in that episode, in that South Park episode, they had this like running gag where the handymen now are like competing against each other. They're the richest in the community. One of them buys Instagram, the other one buys another social media company, and then now like just along that I guess to follow the trajectory of the joke, I guess one of the final beats is like them in those spacecraft, and they're like racing against each other. And so South Park made the joke first, but it still stands nonetheless, right, with the articles that we were reading. So there's that. Okay. I want to shift gears into the sponsor of the show, which of course is Byte AI. Byte AI is a financial co-pilot for your investment journey. I use it whenever I'm investing via Robinhood or Fidelity or whatever. Basically, it gives succinct analyses like underbought, overbought, or neutral, as you can see here, based on news sentiment per stock. So news sentiment for Tesla, Meta, Amazon, etc. As well as technical indicators like the RSI curve, Bollinger Bands, MACD/signal curve. Of course, Byte AI is not a financial advisor, nor am I. Past success does not indicate future results. So that being said, let's read a couple of these. So Tesla underbought. Bollinger analysis shows Tesla trading significantly below the lower Bollinger Band, signaling strong oversold condition. Despite an RSI at 61.8, the severity of the band violation dominates the short-term signal. Wow. Yeah, if it's below the Bollinger Band by that much, that's pretty nuts. Overall, Tesla sentiment in the latest coverage is cautiously bullish, with near-term catalysts counterbalanced by valuable skepticism. Robot AI-focused developments. Okay, tech stock rally, nice. Okay, Meta, how are we doing? Underbought, showing a strong underbought setup at RSI at 37.95. MACD well below the signal line, signaling bearish momentum in the near term. However, the stock is trading inside the Bollinger Bands, but closer to the lower band, with a notable intraday move today. Okay, so I guess Meta hired Apple's Alan Dye to head a new AI-enabled design studio. Oh, yeah, I saw that. Okay, the macro backdrop is mixed but cautious. Soft ADP data, which we talked about, has fueled rate cut expectations, boosting tech market appetite while keeping downside risks if the macro environment worsens. Yeah. Okay. Oh, it changed. Yeah. Okay. So I had this up like about 45 minutes ago. So it looks like it changed because the RSI changes like every 15 or 30 minutes. That's why. So let's see. This is the newest one. I should have a timestamp or something. That way we can exactly track like what time each of these were. Because the other one we just read was about from a half hour ago. So Meta exhibits. So it's actually overbought. Meta exhibits. This is more of a day trading tool, by the way. Meta exhibits extreme overbought conditions, RSI at 89.41, well in overbought territory with MACD signal currently near the signal line and leaning slightly bearish. Okay. Yeah. Okay. Nice. Amazon RSI at 66.2. It's overbought, suggesting a stretched momentum. It's essentially on the lower Bollinger Band. Nice. Okay. Okay, and then let's do NVIDIA and we'll wrap up. NVIDIA overbought, exhibiting extreme overbought conditions from a technical perspective. RSI at 77.8 indicates an overbought reading. The price sits essentially on the upper Bollinger Band. Nice. Wow. Okay. Cool. Okay. I think we're gonna leave it there. Thanks so much. There we go. Thanks so much for tuning in. Make sure to download Byte AI. It's available as an iOS app on the App Store. You can use podcast 20 at Stripe checkout when you're on the web app. So that's at app.byteai.me. You can go to the landing page at byteai.me, BYTEAI.me. Hope you guys make lots of money today. I'll see you guys around. Peace.